Hey everybody, Rob Maurer here, and today we've got some interesting updates from other automakers on their electric vehicle sales. We've also got new China insured vehicle data, news on Giga Texas, FSD, and a few other items as well. Not a great day for the markets today. The Nasdaq down 1.6%, Tesla only down 1.2%, so a little bit of an overperformance, but still down to close the day at $244.12. Just a quick note, as we are heading into the last few days of the quarter, we are starting to see more conversation about the delivery numbers, which we should get early next week. That'll most likely happen on Monday. It's been a while since we've had one released during a trading day, but we'll see on that. Anyway, as we approach the release, we are starting to see revised analyst numbers. I think a lot are revising downward based on the production shutdowns that we've seen, primarily in Austin and Shanghai as well, but those that were paying attention should have been aware that that was happening a lot earlier. However, not everyone is, so not too surprising to see these revised downward. I'll probably go through my expectations on Friday would be my best guess. Relevant to the deliveries topic, I do also want to quickly touch on China insured vehicle numbers. Of course, being Tuesday, we do have these now for the previous week. This is September 18th through the 24th. Actually, a really nice week for Tesla this week. 13,500 vehicles insured. Pretty nice bounce back from the week prior at 8,500. So between the two, those average out to 11,000, which is basically the average of the 2 weeks immediately prior to those. So I think we're more likely to seeing some volatility in how the registrations are falling week to week, but has been pretty steady at that sort of 11,000 per week rate since the impact of the Model 3 really started to show in the numbers. Through 12 weeks of the quarter with 1 week remaining, this moves the quarter to date number up to 133,700. That falls to about 9,000 vehicles behind where Q2 was at this point, or down 6% quarter to date. We're likely to see the quarter now finish down around 10% or so, driven by the lack of the Model 3 over the last month. So not really a bad result, and it'll still finish ahead, most likely, of where Q1 was, and has already surpassed Q4. Alright, next up we've got a pair of interesting updates from other automakers on the status of their EVs. The first is from Volkswagen, with Reuters reporting that Volkswagen will suspend production of their ID.3 and Cupra-born, another electric car, at their Zwickau and Dresden plants in Germany in the first 2 weeks of October due to weaker demand, a spokesperson for the carmaker said. Volkswagen EVs continue, I think, to be a very fascinating situation. Obviously, we had Herbert Diess kind of going all in, and then Volkswagen saying, nope, you're actually not going to do that, replacing him, and now having revised a lot of their plans, including their plans for their next generation vehicle, the Trinity factory, things that we've talked about before. I think they've also struggled to find their footing with the ID series, and I think this is one sign of that, and we'll talk a little bit more about that in a second. But the other announcement that we have is from Hyundai Kia. They've announced, according to Bloomberg, that they will be lowering prices on their electric vehicles, a number of their electric vehicles, in South Korea, beginning in October. Now, the Bloomberg headline draws a connection to demand here. That's not specifically given as a reason for the price changes, like we hear from Volkswagen on the production pause. That part of it here comes from an analyst. However, if we look at the number of EVs registered in the first 8 months of the year, that figure has declined this year in South Korea to just below 68,000 from just below 72,000 a year ago. Now, I don't follow the South Korean market enough to know what things are affecting that. Obviously, subsidies can play a role, and it sounds like they've adjusted their subsidies for the remaining part of the year to help encourage EV sales. But the broader point here is that both of these stories reflect the very interesting period of time that we're at right now in the automotive market, particularly as it relates to EV development. We're now well into this decade that was supposed to be, according to a lot of these automakers, the decade of transition to electric vehicles. A lot of automakers now have these first or second generation electric vehicles launched, and that's great. They get to check that first box for all those previous announcements about what they were going to accomplish. But as we have heard so many times, the real difficulty lies not in just creating a low volume EV, but rather in creating a high volume EV that is profitable. To do that requires a little bit of a leap of faith to make the investment both financially and culturally, plus of course strong execution from that point. So we're sitting here approaching the middle of the decade. A lot of automakers have kind of mapped out those investments, but we're at the point where they need to commit to those and actually bring those EVs to market. That's a lot easier to talk about in 2021 when the capital markets are flush, low interest rates. You're just getting started on EVs. You probably still think that you're going to be doing it better than Tesla does once you actually start. Whereas now, a couple of years later, all that stuff has changed. The capital markets are tight. Interest rates are way, way higher than they were. Maybe your first generation of EVs is out, but they're losing you a ton of money. And you're probably not seeing the best reception from customers, which brings us back to the reports today, with Volkswagen cutting production and specifically saying that it's due to low demand, with Hyundai cutting prices. And you've got Tesla out there acting like a madman, continuing to ramp up production and just slashing prices, and seemingly poised to continue to do so whenever they need to do it, plus working on their own next generation. That is a much, much more difficult environment to try to get buy-in on these types of commitments which only adds incentives and makes it a lot easier to just kick the can down the road a little bit further, try and delay this, keep the financials looking good, and hopefully at some point it'll be somebody else's problem and they can deal with it then. So far, that's been fine because most EVs have been small volume, so anything that you're giving up wasn't really affecting the general market too much. But that dynamic is changing rapidly, primarily due to Tesla and due to China. Because of the scale of the automotive industry and the complexity of it, sometimes it feels like this stuff happens in slow motion. But at some point, the impact of this transition is going to become so significant that it becomes insurmountable for these companies to actually make that transition. Many would argue that that point has already been passed. Wherever that point lies, though, the longer that these companies delay, which I think the current environment incentivizes, the more risk there is of passing that point of no return. So it's a fascinating period of time. Reports like this, reports like we talked about yesterday with Ford announcing pausing construction on their battery plant, whether that's a negotiation tactic or not, there are a lot of signs lately of a little bit less confidence in these plans than what we saw a year or two ago. I think that's pretty telling. All right, let's move on from that topic over to Giga Texas. We've got a couple minor updates here. First is that Tesla appears to have finished the entrance that they've been working on for quite some time now. There were some great shots of it in a video that was shared from Elon's meeting that we talked about yesterday with the president of Hungary. I don't think we have many more details on that, but kind of interesting to see this video, pretty well produced. And nice to see this entrance looking completed. I don't know if Tesla has any other plans for it, but looks like it'll be ready for presumably a Cybertruck delivery event at some point. Certainly very cyber themed. We've also got a nice angled shot of the entrance here from Gregor Truck as well. From on Warbeck on X, looks like Tesla has also filed a permit for a 22,000 square foot cyber cafe at Giga Texas, which sounds really cool. The assumption though is that this would be for employees only, but maybe when Tesla has events, they would open this up. And I'm sure at some point we'll at least get to see what it's like. Next, we've got a new version of FSD Beta that has started to roll out to non-employees today. Seems like there's been a bit of confusion on the actual version number. My understanding is that it's 11.4.7.2. There are probably some minor changes with FSD Beta, but no actual new release notes for FSD. However, it does look like this will be a branch that brings some of the software features that we've had to non-FSD Beta cars now up to date on the FSD branch. We've talked about all those as they have come out, things like the Spotify refresh, etc., but definitely exciting to get those caught up, and hopefully this will roll out widely pretty quickly. Next up, we've got a couple of pricing updates. Drive Tesla Canada reporting that Tesla has adjusted prices for superchargers in Canada. Looks like in most cases, this has led to an increase, in some cases by as much as 25%, though it's not exactly clear what the average change would be. Obviously, that's a little bit difficult to gauge since supercharger pricing varies by location, varies by time, but it sounds like in general, prices increasing. They say that in British Columbia, a number of superchargers had decreases, but outside of that, mostly increases. And then the other change is for the Powerwall. Sawyer Merritt is reporting that Tesla has cut the price on Powerwall 2 by $300. Obviously, we just saw the Powerwall 3 officially added to the site, so it makes sense that they would then cut the price of Powerwall 2, as most people are likely going to want the newest version. Next up is a headline being reported in multiple places today. This one is from Reuters. It says Tesla to face EU anti-subsidy probe over China exports. However, that's, I think, a little bit mischaracterized. The body of the article, which is very short, says that Tesla and European car makers that export from China to EU will be part of a probe into whether or not these companies are receiving unfair subsidies. So it's really not a probe into Tesla specifically like the headlines imply, more of an evaluation on EU subsidy policies in general. And we had already actually talked about this topic a couple of weeks ago. I think the news here, if there is any, is that Tesla is actually going to be a part of what they're evaluating, when the initial reports made it sound like maybe it was going to be a little bit more focused on specifically cheap EVs, which could still end up being the case. We don't really know at this time. All right, and then the last item for today, as was previously indicated, President Biden did attend UAW strike rallies today, encouraging auto workers to quote-unquote stick with it. So it's interesting to see this, definitely unusual, and I think demonstrative of the political power that the UAW has right now, which I think amplified by the presence in swing states. Anyway, I think the visit likely emboldens the UAW with their efforts here, so we'll keep monitoring as this continues. But that'll wrap it up for today. So as always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on X at Tesla Podcast. And we'll see you tomorrow for the Wednesday, September 27th episode of Tesla Daily. Thank you.